What is up, everybody? Welcome into the Creed of Crypto live stream. I was doing that on purpose to catch it. Welcome in. It is Boi Crypto doing some acapella work there for you guys, as well as Crypto Ewok, my friend and co-host. We got a big one for you tonight. You don't see him yet, Dip Catcher, but apparently he's going to be dipping in here in about a half an hour or so. Just trying to get things coordinated with him time-wise today. As you can imagine, a very busy guy. He's got all those gophers standing around him saying, hey, boss, you know, what direction do we take next for these bazillion X gains that are coming? So, yeah, we're going to talk to him here in a bit, and we are very excited for that. The ERC 404s, you know, talk about those as a technology, basically, the tokens on ETH, the tokens on PulseChain, if it could be a, you know, huge narrative here this coming bull cycle. So it has a lot of people excited so far. So we're going to get into that and a whole bunch more. We have a lot of PulseChain ecosystem things, of course, to cover tonight. Before we do that, Ewok, how are you doing this evening?
I'm doing wonderful, man. But I worry about some of these people in the community that are capitulating, man. We made it through the hard part of the bear cycle. Things are starting to look up, and I'm just seeing them, you know, really complaining that they're not happy with the gains that they've received so far. They see things around that are pumping a little bit, and they, you know, I just see a lot of people capitulating at this point. And, you know, we're getting some of those other weak hands out that we were kind of waiting for, I guess. But yeah, I worry about them. You know, unfortunately, that's part of the psychological effect of crypto on people. We'll have to see how it plays out for them. I really hope they don't, you know, sell their whole bag in hopes that they move to something else and have to buy back higher. That's always the hardest. That's always the hardest pill to swallow. So
it's been a fascinating couple of days. I agree with you, because we saw this downturn here in the PulseChain ecosystem over the last, I don't know, 24 to 48 hours, where, you know, kind of the first time we've seen things move down. Again, I don't even want to say aggressively or anything, but basically red candles for a day or two. And yeah, you saw the attitude change and shift big time if you were on Twitter. But if you weren't, you probably didn't even notice anything. You know, so if you've got hex stakes and things like that, and you've got a long-term vision like we do and always talk about and preach on this show, it probably didn't affect you too much. So just shouting some people out. Daddy Hexler, Relaxed B, Relaxing Music, Hookers and Cocaine, DeCoin. I love it. He's all about gophers, it looks like. Min Lu. We got a lot of people pouring into here. So hit the like if you guys are joining us now. We do this every Tuesday night at 8 p.m. Eastern Standard Time. We bumped it up to 7 tonight to try to accommodate Dip Catcher and get out to all you guys. So we appreciate you being here early with us. First off, we're just going to tackle some stuff until he does arrive. First off, just looking at what we typically do with Bitcoin and Ethereum, seeing where things are, and BTC, man, still just holding really strong. And I mean really strong. It's up over 52K now. At this moment, we're at 52.3 for BTC, it looks like. ETH up over 3K now, which is insane. I mean, I'm really shocked by this. Now, I'm not saying that these moves are like so parabolic and we've never seen this before in crypto, nothing like that. But you and I were just talking in the green room, Ewok. We've talked about this for weeks, you know, expecting this market to take a bit of a plunge back down, at least the Bitcoin anyway, into the 30K area, 35, may even get to that lowest level of support at about 32K. We've been saying it for weeks, and we have only seen it do the opposite, which I've continued to be surprised by. It's showing a lot of strength. We're going to get into that from a couple of different angles, taking a look at what 4-year cycle guy, Bob Loukas, and Hex Hater, of course, was talking about with Bitcoin the other day. He was commenting on the insane strength of it now, too. But I'm in shock still. I mean, I just can't believe we're still at these numbers. It definitely seems like we're going to be hitting a wall soon and start to see this pullback. But what do you make of it? Because I know we've kind of been on the same page with this.
yeah, I was watching something earlier today. And one of the guys was talking about how things before the halving happens, they usually have this run up, which it's doing, but then they also have a sell off. And you know, a lot of times, if you look at the RSI, which is down here, and it gets over 70, it means it's really overbought at this point, and it's starting to roll over. Now, it is still looking very, very strong. So I don't know when that happens, but if you go back even to the previous cycle where it got pretty strong as well, and then rolled over. And I think that's kind of, here's another example of it happening, rolling over again and falling. So I think that's kind of what we're seeing. It is very overbought for Bitcoin. It's also quite overbought for Ethereum as well at this point. And I think in that cycle, where was it? Right in here, where it did its rise and then sold off, and then the real bull run finished out. And yeah, I think that's where we're at this point. We are still expecting a pullback. Things are still looking strong. Is it because of the ETFs and all the everything around it? Who knows? There's probably a lot more manipulation happening than previously too. So, that's one of those things you have to figure in. But as of right now, still looking strong. But this RSI is starting to roll over here, so keep an eye out for that. I wouldn't get too anxious as it goes much higher before we do see a pullback before the halving.
Yeah, I think we're going to run up against it here pretty soon. I mean, for Bitcoin to be like this steadily above 50K right now, I don't know, we're off the news of the ETF and all that, but I mean that's been a while. I don't know how much that's affecting this market right now, but it just feels like we're definitely due for some pulling back here shortly. So we'll continue to follow. Obviously, looking at the PulseChain ecosystem. So yeah, we saw this pretty healthy dip down over the last day or so. I'd say maybe the most aggressive one we've had since getting Pulse back up above SAC rate here within the last month or so. But yeah, healthy dip into yesterday. And we already mentioned, I mean, the sentiment on Twitter just one day turns on a freaking dime, just with a couple of red candles, anxiousness, kind of anger all over the place from people. And this is, we'll look at the charts first, and then I have a question for you, Ewok, about like what we saw from HEX and how many big dips there was for HEX in the midst of its first bull cycle last time around that I know that you can provide some good insight on. But first off, let's just take a look at Pulse if you want to go to that chart. I mean, we have Pulse right now sitting at 30136. Pulse X is still right at about 50% down off of the SAC rate. And we've got the combined hexes at about 2.7 cents right now. So 2.6, 2.7. So we're pretty much not way too far off of where we were. I mean, it's, that's what I don't get. I mean, it was like a modest dip, and people just seem like the sky is falling for some reason. I don't know if it's maybe the timing of this, that like maybe we're deep into February now. It's like, hey, we're only a couple of months until the Bitcoin halving. Like, what is going on? This isn't supposed to be happening this late in the game. But as we're going to talk about in a moment, that is going to happen, and it's going to happen throughout the bull market as well. But taking a look at Pulse here, I mean, still looks good to me. I mean, what are you seeing here, Ewok? Taking a look at the PulseChain chart.
Yeah, I'm gonna put this one up because it's a little easier to navigate.
There you go.
Yeah, I mean, we're still seeing higher lows. So step up, pull back, step up, pull back, not as hard. I see this trend continuing. I don't see anything bad or bearish about it. As we said before, this is healthy to have some red candles after you get 5, 6 green, in a row, to have a nice little sell-off. People are going to play zones. There's, these channels that we know that the traders are playing, but they're going to get exhausted, and the big sellers are getting out. That's what it just looks healthy to me. So I'm not seeing anything bad or negative. To me, it just looks like a healthy up chart that's having its series of pullbacks. And you mentioned it earlier, just like Hex did in the beginning. So yeah, looks good.
Yeah, I think we're still pretty much right in line. I really don't get. I guess I know we keep saying it. I'm just confounded at the amount of people that are upset over this last day. What do you make of it just being a timing thing? Because I don't think we didn't see that big of a percentage of a drop, really. I think that this might just be timing, that people are now getting, Sami always talks about it. He's been talking about this concept like jealousy, rage, and stuff like that. Like people are seeing these other coins. Some of them shit coins. They're all shit coins. Who cares? But I mean, like seeing different things run off and being like, why are we still down here? Like, why isn't this ecosystem gone yet? Like, I was here for the 14,000X, and all this stuff. Do you think it's just that? Because I mean, we are now in an
Yeah,
environment where it's not everything is just down only, and we're, people would pick on Hex in the bear market, and it's like, dude, I mean, look around. You know what I mean? But now, people are seeing some of these other tokens fly. Objective Protocol was one that was really crazy over the last few months, and then some lesser ones, some memes and stuff like that. Even some within the own, PulseChain ecosystem. And some people are pissed, like, why aren't we pumping? So, yeah, what do you make of that? Because it seems like a timing thing, and just seeing that other
sure.
things are starting to pop off now.
Well, yeah, I mean, so that's what happens when a layer one gets developed, and especially when you've got over 200 now projects and coins and mini subsets of community that came from basically the same community. You've got a lot of stuff that's getting so diluted. And unless you hear about one of these coins that get launched at the time it's launched, you are going to miss out on a 10, 15x probably, because that's how the liquidity is placed and so thin that it is going to run up right away. So yeah, they're getting angry, probably some jealousy involved. And what are you going to do? You're going to start jumping from coin to coin. If you do that, you're going to lose all kind of positions.
Yeah.
So it is frustrating, and I get it. But the best thing to do sometimes is nothing at all. Time will definitely be on your side in the long run if you have faith. If you don't have faith, man, you probably shouldn't be here. Like, I think some people are here just because of the history of what happened in the first cycle with Hex, thinking that everything in this ecosystem was going to do the same thing and quickly. But what they don't realize is what we went through to get to that part. It was a very long ride up with a lot of pullbacks and a lot of questions. And even the FUD was even worse at that point from the outside world. I think some of that has tapered off a little bit anyway. Now that we do have a layer one and we have projects that have come over and lots of builders, and that our time will come, but it's just a matter of being patient. And I think people just don't have patience. That delayed
Yeah.
gratification is nowhere to be found for a lot of people. They want it now, and if they don't get it, they're gonna cry like a little baby.
Yeah. Yeah, I think you're right, and you had a good segue there because you talked about like just expecting kind of what happened in the last bull cycle with Hex. So talk about that because we're not even really there into like the euphoric, crazy, crazy pumps of PulseChain. I mean, we're not at all there. I mean, we haven't really seen anything. I mean, all we've seen is a retrace of the scam wick down from back in late July, really. But talk about how many times in Hex's first bull market last cycle we saw it go up so crazily, so parabolically, and had multiple 60, 70, 80% drops on like holding back a belch. So sorry about this. But we saw these like crazy dips in the last bull cycle for Hex. So if people are already right now pulling their hair out, kind of looking at other tokens and stuff like that, where could they be, if we see that kind of volatility here in this bull cycle that is similar to what Hex did last cycle?
Right. So I'm going to start this, and I don't know how well it's going to be able to be seen, but we did this pretty crazy dip when Hex launched as well. It took a hard. This is the first. This is launch date here on December. Well, this is from the 15th, so it actually started up in here somewhere. It even was back on the 3rd. So it did fall. It fell really hard. Let's measure this very first dip. Even down to the bottom, 81%. And that, like I said, doesn't really include the first couple days. So, you've got that. And then as time went on, this dip became so minuscule because of that first run up. You know what I mean? And
Right.
then, from there, it ran up, and it did 760%,
Yeah.
from that bottom. And then it continued, and it fell again, and it dipped. And and as this happens, look how these things become almost irrelevant when you look at the chart.
Exactly.
You've got this back here that's only this big, and now you're all the way up here. So that's kind of where we're at in this part of the cycle, and people don't realize that as things go on, you know, obviously it topped out up here around, oh wait, that's not even the top. So it continued to do that. And like I said, this gets smaller and smaller back here.
Yeah.
So,
Irrelevant.
you know, from New Year's, we made it the whole way to 2 cents. And then it pulled all the way back down to, you know, 0.6 of a penny, you know, and then, so all these drops, all of these run ups, it did it, you know, if you count 1, 2, 3, 4, 5, here's 6, here's 7,
Yeah.
8, 9, you know, there's 10. So it probably dipped 11 times, and each one of those were anywhere between 35 and 85% each time. So
Crazy.
that's kind of the thing that you have to get used to as this runs up, and that is healthy. I mean, you know, once a whale or two buys in to a position, it never seems to come back to that level. And this was one of those prime examples right here. You know, it pissed around in here for quite some time. It dipped, it went back up, and then a whale bought, boom, right here. And we never came back to that 306 level ever again, you know. So even to this day, it's never came back. So, you know, again, you're going to have to withstand some of those on the way up, especially if you want the market to be healthy. You know, it's just it's part of growth. It's part of onboarding new community. As people get in and some of the larger whales get out, it's better because it takes a lot of that big block of tokens and it divides it into smaller hands where people are going to be you know, more diamond handed with them. They're not going to part with it for just a 2x, you know, but the people that are selling the larger chunks, maybe they made 4 or 5x already and it's their time to get out, and that's fine. But what it does, it redistributes it into a lot more hands. You know, you may see 100 sales and 350 buys, and your price doesn't do anything. Well, that's great because now you're redistributing it into, you know, a larger subset of people. So yeah, it just makes it all the better for the coin, for the progress of it and everything else, man. It's healthy. And I get frustrated when I see people that don't like big dips. I understand, you know, but it's got to happen.
Yeah, it's tough. It's very tough along the way, and yeah, I think that's a great illustration. Hex may be better than anything to see what it did last cycle and just how many crazy downturns there were. So
Yeah.
we're not even really at that point yet. Again, so you know,
No.
this is more of a time capitulation, I think, that we're seeing from some people right now. So we'll continue to monitor it. I mean, you and I are, of course, still long and strong on everything. I'm interested in DCing into PulseX, Hex, everything in this ecosystem. Your alt or meme coin in the ecosystem of choice. I saw we had some talk about Teddy Bear there from Patrick a minute ago. So yeah, whatever you're into, basically. We still have prices that are for buying. And keep in mind, I mean, we've been talking about this a lot too with these prices being down. Like, there will be a time when the train truly leaves the station to where, you know, you may be thinking, like, even as we sit here right now, I'd say there's at least a consensus that many people are hoping, expecting at the top at least like a 30x on their holdings in this ecosystem from here or something like that. There's going to be a time where, you know, you're down to maybe it's a 4x or something, and you have capital on the sides, and it's like, do I really want to deploy at this point, you know, if maybe there isn't that much room left to run? So that's why we've just preached like putting in everything that we possibly can at these prices. And, you know, pretty much why I've been on a rice and bean diet now for the better part of 3 years. So yeah, that's just kind of where we are. So,
well, and we haven't even had that pullback that we're talking about. You know, alt season has not begun. You know, people are still riding Bitcoin up. They're riding Ethereum up. Once that does have its pullback, I think that's when you really will see altcoins start to do a little bit better on the charts. So, you know, there will be people getting back into Bitcoin, but until it pulls back, they're gonna jump into all kind of stuff. So don't be surprised if when that happens, you do see a little run up, and it takes you by surprise. It could be that run up that I was talking about, where a whale has a lot of capital to deploy. And if you're waiting for something, you might get left behind.
Yeah. Amen. Yep, we're still there and still buying right now. So, if you guys are enjoying the stream, do us a favor and hit the like. We are waiting on Dip Catcher, who should be here hopefully within about 10 minutes or so, to talk some GOFURS, some ERC 404 tokens, and of course, Pool Party, which he also just launched as well, a new way to do pooled hex stakes. So we're going to get into that. Real quick, a big topic over the last couple of days. I am pivoting here a little bit because it makes sense to cover now, and you just kind of mentioned it, Ewok, talking about whales and buying. With whales and selling. So we have talked a lot about BankX. A lot of people have, as far as them as an entity with their algorithmic silver stable coin. Just the other day, it's funny. We had a clip from our stream last week pop up on the channel just the other day. And we were talking about why identifying BankX, knowing that BankX is out there and how much hex they have to apparently sell, and all this stuff is a good thing. Like, just that awareness, because on a lot of these other blockchains, you don't know. Like, it just kind of hits you in the face. There are token unlocks that are scheduled and come out. So, excuse me, if you're in Solana, Polygon Matic, Arbitrum, Optimism, some of these other things, you're going to get dumped on kind of without even knowing it. There's just going to be like huge dumps from VC, venture capitalists that got into prices that you never even saw before. We don't have that here. We bought the lows literally on PulseChain we all had a chance to do. But people get butthurt about BankX and the fact that they have 700 million eHEX and are looking to sell it apparently, and all these things. Knowing them and being able to identify them is already something that we have in our advantage. But we saw the news the other day that they did put up a sell wall, it looks like, with about half of their remaining stacks, so 350 million eHEX for sale. I don't, and you'll be able to help me with this a little bit, Ewok, but I know it was between 1 and 2 cents. I don't know if it was just like different orders at different times, I'm assuming. I don't know. Axis Alive, I think, kind of broke the news on this, or was looking at the on-chain stuff. So fill in the blanks for me a little bit as far as like how much they definitely have sitting out there on limit orders for sale, what the prices might be, and what are they exactly planning here. We'll get into like more details, but what do you make of this? Because we've talked about for a while, like, just get them out. Like, anybody that has, is not planning on holding long term, if we know they're not going to, the sooner the better, just get them out of here. But what do you make of this, and what other details can you add to them putting up these cells here?
Yeah, so they did an approval for 350 million hex to sell, because when you provide liquidity, you have to, obviously give it permission to sell your tokens when you set a limit order, because it kind of holds them in play. What they did, I think what I saw was there was 5 different ranges that they had set, each one being a single-sided liquidity, basically between the range of 1 cent and I think it was 2.5 cents or so. So they broke that up into, like 70 million each, on each range, essentially. So as the price moves up, you're eating through the liquidity. You're basically buying it from them, instead of like a market buy. So in turn, what that does is it doesn't dump the price. So they could just do one big sell. Not only would they sell it all at once, but they would get hit with a very large slippage,
Right.
as they bought, because the buy orders are just not enough to fill that kind of quantity at this point. So they did it the smart way. They also did it in a way that doesn't wreck the price. Now, there are people on both sides say, man, I just wish they would have dumped it and got rid of it and been gone. And in that sense, you would have gotten a hell of a deal, probably, because it could have put it way down to that point where I said we never saw that level again.
Right.
It could have put it into that range. I do think it would have been bought up extremely quickly. And the only reason I say that is because of what happened today, but we'll go there in a minute. So they took it, they broke it up into 5 different ranges. So as the price goes up, it's going to have to get bought through. Now, here's the one thing that I'm not sure of is if the majority of Hex is tied to Ethereum's price, and Ethereum happens to rocket, it will pull Hex up with it, right?
Hmm.
Is there any chance that it bypasses any of these sell walls because of the price of Ethereum? That I don't know, and it's an interesting question um, to pose to somebody like Axis would probably know best. But do you understand what I'm saying?
Yeah. Yeah,
So
just the liquidity and the fact that it is on ETH, and if because that's the way it's always gone. I mean, for altcoins on Ethereum, like when Ethereum starts to fly, which right now it's doing all right. I mean, it's over
right,
3K now. If we see it go to like 3,500, push to 4K, I mean, now people are going to be talking about new all time highs for Ethereum because that
exactly.
was what 4,800 or something,
Yep,
5K. I
yep.
remember because I bought it like an idiot. But yeah, people are going to be starting to talk about that, and yeah, I'm with you. I mean, like I think no matter what, because those huge sell walls are going to be there, I mean, you can't just overcome that easily. But I think that, yeah, I'm with you. I mean, if we are seeing ETH do that, I think that it would be an easier time of it anyway.
Yeah. Well, I
Yeah.
just think it would bypass it because the value
Mhm.
instantly is transferred over to everything that it's tied to. And because those walls are so not thin in volume, but thin in price,
Mhm.
it's only going to 2.5 cents. If something magically makes Hex go to 3 cents, it bypasses their entire sell wall and
Mhm.
never gets filled. And I think that is a possibility. I do think Mr. Chink said it too, and I was just going to say this. I think they're going to regret it. I think, but maybe they have other intentions for the money that they want to get out of it, whatever it might be. But either way, they're doing it without hurting the price, which like I said, some people are happy, some people are not. I could go either way with it. It doesn't matter. But we did talk about this and tell them to set single sided orders so that if they want it out and they listened. So apparently they're paying attention to what's going on. Now, with what happened today on MEXC, which is a centralized exchange,
Mhm.
somebody went in there and sold 25, 26 million in one order and essentially tanked the price. But luckily there was a whale or somebody sitting over there and it bought right back up within the same candle, essentially.
Hmm. I didn't see that.
So yeah, it dipped pretty heavily and then it actually went back up and then it evened itself back out to the regular price. The liquidity is very thin over there. There is not much at all. So,
Mhm.
when you sell 26 million hex, it's going to hurt it bad. So the guy took quite a bit of slippage over there as well. So,
Yeah.
good to see it got bought right back up. That was nice to see. And, we carry on.
Yeah, I mean, I think again, it's a positive that we even know who this entity is, and yeah, who knows as far as like, will they regret it? I mean, maybe they have plans for like a copper, algorithmic stable coin or something like that. I don't know. We'll have to see how that goes, but yeah, it is what it is. It's going to be there. It's not going to go away. So you might as well just welcome it and get it done sooner rather than later. I would much
Yeah.
rather have that.
Well, the other
Um,
thing I saw too was a lot of people that were requesting that the Godwell buy it back
right.
at these prices. I'm not sure what level he sacrificed at. I don't know those statistics. I don't know when that sacrifice was or what the price was. But it might be a good offer on his side if he still believes in it, which I think he does. He still holds the PulseChain side. He still holds quite a bit. Maybe he's not looking to increase his position at this time, but I've seen a lot of people suggest that maybe he should just eat up that wall and be done. But that
Mhm.
only puts them at halfway out. I want them to kind of suffer a little bit.
Yeah.
People that put
Masochist.
people that put that much liquidity up at one time, maybe they're not in a hurry, maybe they are, I don't know. But if it takes a while to eat through it, they could get impatient, pull it, and do something different. So I think that's our next kind of experiment to see how are they going to react. Are they going to be patient? Are they going to let it fill, or are they going to get impatient and pull it and just dump? So
Mhm.
there is still a chance of that.
Yeah. Yeah. it's something that we're going to continue to hear about. I mean, just bottom line. But for the people that it is stressing out, I mean, I would literally have the total opposite reaction. Like you have identified who it is, you know who it is, you know how much they have. I mean, these are all variables that you just would not have on another blockchain. Like, there's just no way you would be able to see this stuff.
Yeah.
So, or this specific of stuff anyway. So, yeah, not worried about it. And we'll continue to buy the dip if it does dip whenever that happens. So, it is out there. Let's go. Have you been checking? Do we have any word from Dip Catcher here yet, or should we move on to our next topic here? If maybe he's said anything.
I haven't checked, but he said he would join us, so no message.
Okay. Let's go here. So if he comes in the middle of it, that's fine. So going back to somebody who, speaking of Hex, and somebody who wants to sell it and doesn't like it, let's talk about Bob Loukas. Now, he's never really shorted Hex or anything to our knowledge, even though he is a Hex troll and will have, every now and then for engagement farming tweet about Hex. And we had this discussion before we went on the air, but like one thing about Bob Loukas is, I mean, he is a good, as good as you could be anyway, I guess, trader. And I am interested in his insights on the Bitcoin 4-year cycle. Not interested in like his thoughts on like DeFi and the rest of crypto. He's been pretty hypocritical with a lot of stuff too, like used to shit on NFTs, and then he had his own Bitcoin ordinals and stuff. So, I mean, whatever. Take all these different people and these personalities you see, take away what they're good at and just ignore the rest. That's what I've kind of realized over the years with some of these people. But I do like what he says with his 4-year cycles, and he did just release a new like 40-minute video a week ago today, where he was talking about what the chances are that we're going to see this early left translated cycle, which many people have been talking about, especially with this early approval of the Bitcoin ETF. And, could we see an earlier Bitcoin top like this year, middle of the year, fall, something like that, where we do see Bitcoin go to like 80K or something really quickly, not a year after the halving like we're used to or anything, but just way sooner than that. So he kind of broke down the scenarios of the likelihood of that left translated cycle happening versus a more traditional, longer, into 2025. Maybe we get a couple of tops, maybe deep into 2025, blow off top at the end. The thing that we're more used to, What I will say is he sounded incredibly bullish overall, which, again, take or leave his thoughts on some things outside of Bitcoin in the 4-year cycle. I am interested in his thoughts, and like, if he's bullish on the way things look right now, I have value in that. And I distinctly remember Bob Loukas buying Bitcoin in tranches when we recovered off of the 15K number and we're at about 17K. He was comfortable pretty much calling the bottom when, and hindsight's 2020. Right now, you can look back and say, oh yeah, well that was easy to see. Well, you have the foresight of the chart. He didn't at the time. So I mean, he had the savvy to pretty much like feel confident as to where the bottom was in the bear market. So, but he was just really bullish on the overall strength of the market, like we talked about at the top of the show. Ewok, Bitcoin's still pushing through 50K right now, and he buys this narrative of the big money being in these ETFs, and seemed to give equal weight basically to the left translated cycle again, or the traditional one that we get. He said not enough evidence to say one way or the other yet, but preferred, of course, the traditional, which I think most of us would want, where, we still have some DCA time right now. 2024 is a green, pretty bullish year, but 2025 is when things get like really insane. He has said this before, and I'm still surprised by it, but he thinks BTC is going well over 100K in either scenario. Didn't necessarily give an exact number. He was more looking at time, which really is his like specialty after all. I guess my question is, I'm not going to necessarily like quibble with anything he said, but give me your thoughts on his thoughts, and react to it. But also, what would you prefer? Because we haven't really seen a left translated cycle like this before for Bitcoin. Would you prefer something where this, we do get something earlier and maybe more muted, but we all get potentially paid off quicker here, or a traditional bull market where we have to be even more patient than people are being right now? What would you prefer?
I think it's more healthy if we have to be patient. I think the market can go a lot higher at that point. rather than you get one big blow off top, and you're gonna have a lot bigger of a sell off. And Dipcatcher did say he'd be here in 5 minutes.
I just saw your
So I prefer it do what it's done the past 4 years, and not really surprise anybody, do anything different. And I just think it's healthier that way. I still think it will go over 100K. I don't know how far though. Originally I had said 135, 140. I don't know if it'll get that far. There's a lot of retail in there, and if they see those type of gains, will they sell? I don't know. I know there's been what was it total? $5 million of just retail in the last, or maybe it was 5 billion in retail volume in the last couple days alone. So, I honestly, I prefer the elongated market. I think being healthy, have 24 as a slow, steady, don't do a whole lot for 5-6 months, and just chop around in these ranges, but slowly increase over time. And then all of a sudden, boom, it takes off. Next thing you know, you're into 25 and we have our major run up. And that's pretty much the top toward the end of 2025. So I think it is healthier that way. I don't want to see something too early. I would, because the last time we saw the double top, right? It topped out at 60, 65, and then it did another wick up to 69 and had nothing left, and it just died. So I don't know. What's nice.
Yeah. I'm with you. I mean, I definitely prefer the traditional cycle. I think that anybody really should, because it's what we're used to. It shows that you have more time, and a lot of times talking about the left translated cycle, the top isn't as high as you really want it to be. So, and who knows? I mean, there's been people also talking about, like, with a left translated cycle, getting that early kind of top out, but then maybe later the bull market extends, maybe slightly into 2026. And we get like a slightly newer high or something. But either way, that's all stuff that it's even harder to plan for, because we haven't seen it before. So that's why I think the best thing, kind of like we were saying at the top of the show, is just like DCing as heavily as humanly possible right now. And that for the whole last couple of years, like we have been, before these kind of moves happen. But I came away just encouraged at how bullish he seemed. And I get it. I mean, I don't know how, like we were saying there, looking at the Bitcoin chart, how could you not be looking at this strength? I mean, say what you will, like, oh yeah, it's because, it's just this temporary ETF thing. It is not doing what I thought it would do right now. And that's cool. But we also want like more of an alt season too. So,
we do want to see the gains, obviously, but I'm perfectly fine waiting until 25 till it happens. So
yes, definitely. So if you aren't familiar with Bob Loukas, again, I would say that his takes on HEX ain't worth a shit, but I think he really just does that for engagement. He is good as far as the 4-year cycles. So check him out. Definitely has some good thoughts. And he was bullish for sure. So apparently we are on the verge of Dipcatcher being here. Maybe we should just have a little preliminary conversation just about this. So anybody in the chat, so go ahead, and any questions you have about GOFURS, ERC 404s, get them in there. We'll ask them to Dipcatcher as well. But Ewok
and pool party for that matter.
And pool party. I keep forgetting it just because, there's not a cool associated, stack of gopher picks to go with pool party. Although there are gopher picks at the pool. I have seen pictures of those.
Right.
But what do you make of this ERC 404 technology, though? Just asking you, because I mean, we now have the ability to like buy partial NFTs. I know some people are still like, oh, it's bullshit, it's shitty JPEGs, whatever. It's that whole thing that we always go back to, where it's like, okay, yeah, you can think it's dumb, maybe it is dumb, I don't know. But if a market collectively decides that there is value to it and they're running to it, then I would like to be there before the rest of them get there. And to me, while I'm not necessarily interested in committing like a lot of money to any of these things yet, I mean, we haven't seen much get launched in the way of ERC 404s. we saw the stuff happen with Pandora on Ethereum and some of the things that they're doing. And then right on the heels of that, right away, Dipcatcher started putting out these GOFURS on ETH and then on PulseChain. So I understand it, but I mean, to me, at the very least, it's worth getting an investment in it. And I did do that. I bought the local top, and now they're down below $900, I think, on Pulse the last I looked, as far as GOFURS. So I'll have to like rattle the cage with Dipcatcher on that and tell them to get the price back up. But yeah, what do you make of the technology overall, Ewok? And do you really think that this could be something that is a main narrative for crypto in this bull cycle?
Well, I think it'll definitely be a one of the narratives. I mean, I still think, unfortunately, I think AI coins are probably going to do something. I don't know much about, like, I've just never been a huge NFT guy, kind of what Richard has always said is, they are JPEGs, loosely tied to a serial number. And whether they're still hosted on the internet or on the blockchain or whatever, that to be able to see them is another question. So they'll always be on the blockchain, but to be able to see that JPEG is something interesting. And it leads to a broader discussion of how high can they go. Well, I think Dipcatcher set the liquidity in a very interesting way, and we'll get to talk to him about that. To keep these things at a certain floor, and it makes it very price positive. So,
yeah,
in fact, the star of the show has just entered the building. So
looks like he is in the house. Hex Girl, we are going to answer your question. We'll have Dipcatcher here do it in a moment, I think, and kind of break this down even further. But yeah, if you want to go ahead and bring him up, there he is, Mr. Dipcatcher.
Hey, everybody,
what's going on,
man? Is my sound all right?
Yep, sounds
good, man. You've been quite the elusive guy over the last couple of days, which understandably so. I mean, you got all these GOFURS kind of barking up your tree and, needing direction. You got to provide them direction. So tell us just real quick anyway. I mean, how's the last week or so been? I mean, like this stuff has just like seemingly come out of nowhere.
Yeah, I mean, it kind of has in a way. It's been a lot of fun. Getting to do what I love to do, which is just make stuff and talk about it. So
yeah. I mean, to you, I guess to us, it seems like it's all totally come out of nowhere because we didn't know about it. But as we've kind of heard from you, I watched your stream with Gold Key the other day. This was percolating kind of in the background for a while, it seems like. So before we get into like how you came up with the idea for GOFURS, like what we're doing right now and everything, can you tell us a little bit about like your background with coding and stuff like that? And, what interested you in like creating some of these perpetuals and stuff around Hex over the last few years, and then kind of what brought you eventually into looking into the newer types of tokens in the ERC 404s?
Yeah, so I guess I was never really interested in technology or anything until I got into college. And then in college, I studied statistical engineering, but I've always kind of didn't just want to be like another engineer in the cog. So when I was leaving college, I started working on the first startup that I ever launched, and so that was me and Goldkey's first product that we ever launched, and it was like the first 3D virtual reality app on iPhone for sharing 3D virtual reality content. This was in 2016 when we first launched that, and it was I think just way ahead of its time, way too hard to get customers. So that was our first kind of foray into building stuff. And that's what actually got us into crypto, because we got funding from a company that was a crypto company, because we were actually trying to integrate content monetization into our app. Where you be incentivized to create content and stuff. And so we ended up shutting that app down for after about a year or so, because it was just too hard to get customers. At that time, people weren't trying to VR content. Everyone was going into like TikTok. Stories was just coming out on Instagram. So just social is a hard space to crack. So we shut that down, and we started working on at a legal tech that was like a little bit further than where we got. We got, kind of far with our app, but then we joined this other startup and worked there for a while. And just all that time, that was kind of when Hex was coming about, and So we just kind of got into Hex and the community. And then, so I had just time been, learning how to code. Like doing that VR app was really the first time I ever coded. So that was how it started, just doing startups. And then the stuff with the perpetuals was more out of trying to solve a direct problem that was really amplified when Ethereum had an upgrade, and the result of the upgrade was that certain types of interactions with storage in the contracts, so reading data from the contracts, was going to suddenly cost 3 times as much gas.
Yeah.
And that type of function was the function that Hex staking calls. So it became very clear at that time, because by then it had been like 2 or 3 years of stakes were coming out, and then the stakes were just shockingly expensive. It was a combination of high ETH price, high gas price, and then the gas for ending a stake suddenly increased by 3. And that function is pretty gas intensive from how it calculates the yield over the whole stake term. That was where the first concept of the stake pools came from, was just trying to solve that problem, because it was when I ran the numbers and I was like, okay, at 15 years, only 2 max length stakes can even fit in a single block. And so in 15 years, when you see that big wave of max length stakes ending, that's going to fill the blocks, going to drive gas price even higher, going to make less stakes feasible to end. And so that was really the core problem that the first stake pool maxi solved, which was a 15-year stake pool. So it was kind of just like more out of that. I had first thought of that idea. There's actually a record, if you look back at the archives of the Hex in Telegram. I was discussing the concept of aftermarket for staked Hex before Hex even launched. So it had kind of always been there, just kind of, sitting there in my mind. And then I thought that it would have happened, so because the people that made Staker app actually had some type of like stake transfer stake, and they were focusing more on the transferability. I was focusing more on and same with Hedron. Hedron was focusing more on the transferability. I was more focusing on the reducing thousands of users into a single transaction for ending the stake, instead of 1,000 users to end stake on their own and pay a fortune. So that was kind of how it took. So it was an idea that was just kind of sitting there. And then it just seemed like the time was right after that gas fee really started going up. And then, so one day I just decided to figure out how to make it. So that's kind of went.
I mean, it's an awesome idea. I mean, like for anybody who because I think we do have some viewers that maybe weren't around as much last cycle and didn't know about Maxi and stuff like that. It really is a great idea, because, it can get harder and harder, especially on, when we were just on ETH, to create these long-term Hex stakes. And, that gives you the chance to pull together. We're going to talk about Pool Party tonight as well. Obviously, it was just launched yesterday, right? Yesterday. Everything's so quick right
Sunday
now.
night.
Sunday night. Yeah. So, I mean, so much to talk about. So let's go to the ERC 404s real quick. So, and I'll have you explain this. We just had in chat, Hex Girl just wanted to understand what they even are. We talked a little bit about them for the first time on the show last week, but when did you start looking into these? Because I heard you say that you were doing this a while ago, and at least looking into the model of technology. We saw, and admittedly, we don't know too much about Pandora on ETH, but it looks like they kind of got the ball rolling. And then I swear to God, I mean, it was only a couple of days for me even really hearing about Pandora and what they were doing, until all of a sudden you've got GOFURS launching. We see it on ETH, we see it on Pulse a day later. So when did you start really getting interested in what that technology was, and then you can kind of explain what an ERC 404 is, if you don't mind.
Yeah, I mean, so for quite some time, I've always been really fascinated by the concept of digital collectibles, and I like digital collectibles where there's a liquid aspect to it. Probably the first thing that was roughly related to this category was a thing called socks, which was when Uniswap first launched. They minted 500 tokens, put them in a liquidity pool, and then they made 500 pairs of these unicorn themes. And that was probably the only thing that actually outperformed Hex in the bull cycle last year. It went from less than $100 to $200,000. And so
wow.
It went from dollars to even more, so it was on the scale of Hex's total bottom to total top performance. And that you trade the ERC20, and then when you would redeem the socks, the actual physical socks you put on your feet, you would burn the token. It would mint you an NFT just as like a commemorative thing, and then they'd mail you the socks. And so I thought that was a really cool concept where you had a token that was deflated because people were buying it and then burning it to get something else. And so at first people were burning it to get the socks, but then because you got that NFT, when that NFT craze was really going off, people were just buying it to burn it for the NFT. And so that's what really drove the price up. So that was kind of the first time I've like experienced a ERC20 token that was like kind of related to an NFT thing. So that was kind of the first inkling of that just concept. Actually, when I was making Pool Party, there's an aspect of Pool Party where there are these things called name tags, and they're just NFTs related to words. They're loosely related to an image that has the word, but they're strongly on-chain related to, in an immutable way, to a word on-chain. And so it's like 0 through 9 characters. There are some bad words that were omitted from the available one, but it's just like basically words. And those are used as part of like a name registrar for the stake pools that launch, just so people would, have the chance to have a unique brand. So that was kind of it was just kind of an add-on to that to just improve the stake organizer experience. But so that contract actually has, it's the parties in ERC20 token, but then with these name tags are ERC721 NFTs, and the ERC contract is what is considered the owner. I think owner is a bad term for that, but it's like in the code you'll see it says owner, and so the party token contract is what governs the minting of these NFTs. And so, and while I was building that, I was looking into this other token standard, which is called ERC1155, which allows you under a single contract address to deploy both mul tokens, like ERC20 and then also NFTs. So I had almost built the whole Pool Party system on ERC1155, but I chose not to because I didn't want to drastically the token type for something, because people had already known the stake pools and those are kind of tried and true. So I didn't want to introduce too many big changes to that. So I had been actively seeking solutions for a single contract that did both ERC20 and NFT stuff. And so just while we were waiting for the Pool Party audit last Friday, I wake up and I see Golke had just made a post about ERC 404. And instantly when I saw NFT and ERC at the same time, I've literally been thinking about this. And so then I read the Pandora code. And so I was like, oh, wow, this actually could be quite easy. And at that time, they didn't even have a website. It was just on Exchange. I'm like, okay, that's usually the thing that takes the longest to build is the front end. So I'm like, okay, like if you launch this and just where the whole experience is buying it in from the DEX, that will take no time. And so from the time that I had, and I'd seen the ERC 404 stuff kind of bubbling up in conversation over the prior week, but like that was what really drove me to take action. So from reading that to deploying GOFURS was probably like maybe 8 hours or so.
Wow.
That's crazy.
But it's very, very simple. And I think it's because I had already been kind of thinking on a concept like that. And then it was just kind of an opportunity so it was, that was kind of how that unfolded. And to answer her question about the ERC 404s, you can think of it like a token that once you get more than one of them, an NFT suddenly appears in your wallet. But then when you send the token and now your balance is less than one, the NFTs. So it's like holding a token that you can buy from a decentralized exchange, which is generally a better experience from a buyer's perspective. The market's just a little more efficient from the liquidity pool model versus the listing of NFTs like on OpenSea or other marketplaces. So that's really the ERC 404 concept, is that it's a token that acts like both a normal token and an NFT.
I think like the simplest way of saying it too is like just a fractional, way to buy fractions of an NFT. Like GOFURS, for example, last I looked was about 900 on Pulse, but was up at 1150 or something like that the other day. So, some people, especially in the last bull market with certain NFTs, might have just felt like I don't want to shell out X amount of money to buy one right now. But you can DCA into them actually with this technology, which I think is really cool.
Oh yeah,
yeah.
it definitely allows people to capture the upside of demand for the NFT without having to own a full one. 'Cause it could get unreasonable. Like the Gophers, I mean, those Gophers guaranteed 10 gazillion% return. So once it
Right.
goes, one, it may be quite expensive. So
Yeah.
And I tried to capture that number on tonight's thumbnail, but I wasn't quite sure what a gazillion did
yeah,
look
how many
like.
zeros
So
are in a gazillion?
I did my best. Only the Gophers know. Did you have a follow up there, Ewok? I was going to continue with the Gopher stuff and then throw it over to you for the pool party stuff.
Well, yeah, I do kind of, because I had a
Go ahead.
theory last week that we were talking about on stream. If you are at one and you have the minted one and you sell just a little bit that gets burned, you buy it back, you get a new one. Does it necessarily make it the same one, or is it randomized? And could you get a completely different one? And if you did that enough, could you really end up getting a lot of the rare ones that way?
Yeah, so basically, because there is that kind of recycling, because the contract doesn't know like what your other address is. Like anytime a new address, has a balance, it checks, and then it randomly assigns at the time of checking. But yeah, so the way I view it is that by holding it, you actually have 6 NFTs, and then one of them is being publicly presented on your wallet at any given time, because you could just shuffle back and forth, and that actually I think comprises a lot of the trading volume. I think people actually like shuffle in and out, and so that's how I view it, is that scarcity isn't necessarily like hard baked in. I think there are some scarcity like in low numbers, because the way that the NFTs increment, like if you recycle, you could be incrementing the IDs, but then the ones that you had in the past go away. So I think very low IDs could be very valuable, and because you can transfer them as an NFT and it retains the ID and the so the I think that there's the scarcity isn't necessarily related to the image. I think the scarcity is probably related to the low number, and then
Okay.
also the scarcity. If you like do some sleuthing and look like, okay, this person got the one that only goes for one of 8 people, they got that on the try. You can kind of deduce how many times it took to arrive on that. I think there's some scarcity in that, but there hasn't really been a premium on any of them on the NFT marketplace, and I think that's mainly because the DEX pool is just so liquid, so it kind of doesn't make sense to overpay on that. And so I think the market is more centered around the ERC20 form, and I think the NFT part, I think that's just like a fun magical experience of getting a token on a DEX, and then now you have an NFT. I think that's just actually a really rewarding experience, like sitting there, even though like it almost doesn't matter which image you get, because you basically have all 6, but that suspense of buying it and then waiting to see which one you got, I think is actually a really like, it kind of tugs on the heartstrings a little bit. So I think that's like the value of that, really.
Cool.
These little creatures, they were obviously tugging on your heartstrings as you were kind of creating them in the background before launch. I'm just curious, with some of the content, like the AI picks, some of the videos, stuff like that, the idea for the name, which is truly fantastic, which I always start to forget the acronym, good old fashioned unregistered securities. How much of that was like, how much work did that take before launch? Because that's kind of the fun stuff. But did you just start creating a backlog of stuff with that before launching the token?
It was kind of just like make things as they're needed. The name Gophers for that, like with that acronym, that I had like 6 months ago.
Yeah, it's brilliant.
And like a more like kind of a more serious thing, it was the idea was like basically like an on-chain hedge fund that like very publicly just refuses to comply with SEC registration requirements of, you know, a normal hedge fund. So like, kind of like it was meant to really kind of poke it at that, more as a joke, kind of when the like Richard stuff started going on with the SEC. That was when that was kind of, you know, it's kind of, and I think that now it's kind of more evolved into like a symbol of fun, and also a reminder that the right to choose what you do on chain, that's a human right, and no one should infringe upon it. And so just because somebody, you know, has a law enforcement arm related to them, tell you that something you're doing is illegal because it's unregistered, that defies natural law, and that it's not, you know, it's not part of how you know these gophers operate. So that was kind of the more, you know, fun part. And it's like, what, these things are gophers. It's a token backed by images of gophers that wear colored glasses and gold chains.
Yeah.
Kind of.
It's awesome.
There's some symbolism, but I think it's more about just the fun of these little creatures and the personas that they've developed.
I saw one of them was already hanging out with John Cena by the looks of it, so that was very cool as well. So this leads right into my next question here from Tech Dude. So what went into the decision to introduce them with really thick, that's double C thick, liquidity on both chains versus thin? Because, you know, a lot of people want to have that like chart that they can look back on with these like crazy parabolic gains. And, you know, one may argue like with thicker liquidity, maybe you can't see that. I think you've talked about this a little bit, but, you know, as you kind of get out there and people hear what was behind all this more, I think people want to know what kind of went into that decision. And do you think why do you think it was the right way to go for them?
Yeah. So I think that in a lot of cases that when you see a coin that had just like a massive move, but then you look at actually how many people bought and sold, it's like the chart appears to be like it went up very much, but no one realized the gain. And so in some ways, I think it's kind of misleading to just kind of like it's almost like in some ways, I think it's almost lying to new buyers about like the true value of the thing. And so I guess the launch strategy of Gophers was more around establishing a thick price floor, because once the liquidity moves through that like initial tranche of liquidity that's down basically in between the launch price, and most of it was between launch price and 9x move, which is still a lot. Like in any other market, that's shocking. Crypto, maybe not. So you know that most of it is in that tranche, and then it extends up to about 20x. So like the thinking behind that is because it was deployed as a V3 pool. And so it started with a bunch of gophers, and then as price works its way up through that, now that with Pulse. And so now that Pulse that's sitting there, that's like a strong layer of just like demand that's just there, regardless of new buyers. There's just that baseline of demand liquidity pool that's there. And so that as like a kind of a launch, like a next wave that you know, kind of just helps establish that like price floor. Because if you're a trader and you see that massive wall of liquidity, you may put your bid order slightly above it, and then people put theirs slightly above that. And so it can kind of provide a foundation for new buyers and traders to reference. And I think that with a lot of coin launches, there's a cohort of users who have way lower of a cost basis than another cohort of users, even if they got in at just like from one to the next. And so having that thick liquidity at the launch, like in that launch price range, that just helps people just get a better deal. Like, you know, it kind of helps people. One, if you're a large buyer, you're not getting barely any slippage. Like I think that like $50,000 buy order is like less than 1% slippage, which 50,000 in any other coins is going to double the price.
Sure.
But with this, just allowing more, you know, people who are actively involved in these first couple of weeks to get roughly, I mean, even though there is a dispersion, you know, but most of the trading has happened between like 6 and like 7.5, maybe closer to like 4 to 7 if you include that last part of that range. And so most users are getting in at a pretty close price range. And I think that just creates a little bit less overhead from like, a handful of users that gobbled up the majority of the supply, who then are now active sellers for years on end. So it kind of, that was part of it. I wanted more of the early adopters to get a good deal and then get roughly the same amount per dollar put in.
Nice.
I think you're definitely accomplishing that. Yeah, it seems more fair that way, and we've seen people do that. Like even this retracement right here. I mean, what percent down are we really from the all-time high? I mean, you're really not,
Probably maybe.
Yeah,
and I think it's because that went into, because GOFURS was included in the pool party airdrop, and so there was a lot of buying leading up to that, and so it basically, I think by now I'll have to look a little closer at the chart. I think that it has basically just given, at least on Pulse, it has given back the gains that were experienced from the time that the airdrop was announced to when the airdrop snapshot was taken.
That makes sense.
So there's basically back to where it was before that.
Pull it up on PulseChain here for you.
There you go. There's the daily, which is only about 9 days or something like that. But yeah, there you go. Yeah. Yeah, I think you're about right. Yeah, since the announcement, it would make sense that it would kind of retrace back to there. So, yeah, but looking good. I mean, maybe we can consolidate here for a little while as well, which would make sense now that we have seen Pool Party come out.
Yeah. And I think a lot of that is actually, like, if you click the red pulse, but like see at the top of the screen, it says USD/WPLS. I always chart in the WPLS one because that more accurately shows the buyers and the sellers of GOFURS. Because that USD chart also includes basically the price of Pulse. And so
Gotcha.
That's so you kind of took the elevator up and then the stairs down, which I like. I think it's probably better than taking the stairs up and the elevator down.
Yeah,
definitely.
So, cool.
Yeah, it looks good. I had a question about the idea too, and I really like that you did this. But so you launched it on Ethereum first, and then a day or two later, we get the the launch on Pulse. Was it always your plan to launch on both chains? Like, were you ever just thinking maybe just PulseChain, or were you always going to do both? And what was your motivation for launching on ETH first?
So they actually were deployed at the same time, but the liquidity pool for GOFURS on PulseChain was actually quite difficult to set up because the liquidity pools platforms that exist, maybe there might be more, but at least the two that I know of are 9mm and a fork of the front end that Alex from Hedron had made, and for some reason, it's a complicated technical reason, but basically it was a lot more difficult to deploy the liquidity pool on PulseChain than Ethereum. It took hours and hours of work to figure out how to do that, and so that's why the Ethereum one launched first, and then the PulseChain one. It was mainly just because the front ends for deploying V3 pools, because the ERC-404 token, it kind of looked like, from a smart contracts perspective that's interacting with the tokens, like a DEX, for example, from the smart contracts perspective, it kind of looks like an ERC-20 token, but it doesn't act like one. And so some of just like the way that they work, so the step for deploying a pool, it just didn't quite get along with each other. There are steps that had to take that required like kind of writing some code to automatically deploy the pool on PulseChain that was required, and that was just like based on how those for some reason different on Uniswap. Maybe it's a new version or something pool factory, but it was just harder to do. So and the plan was always to launch on both chains. I actually really love the cross-chain aspect. I think that's really PulseChain's most valuable trait, is that it shares history with Ethereum, and like you can deploy smart contracts to both chains at the same time that have the same contract address, and so they're completely independent, but they kind of live in parallel, and the market kind of loosely prices in the differences between the two. And so I really like the dual chain launch, and I think that it makes for like exciting dynamic, because it gives like a new buyer, it actually gives you a tough decision to make. And anytime there's tough decisions to make, I think that that's positive for price, because it just amplifies the speculative aspect of it. And so I think that's big. And then also it gives people a chance to kind of act like it existed before the PulseChain fork, where you could buy both, and now you have it on both chains, and that's pretty cool.
Yeah.
And then also I think it can be valuable advertising for like to reach new audiences, because if like for instance with Pool Party, which was also launched in the same way on both chains at the same time, the Ethereum one had crazy trading volume in those first couple hours, and it was causing the like it was trending like number 2 or 3 on Ethereum on Dex Screener. And so I think that like attracting new eyeballs by having assets that live on both chains, even though they're fully independent, I think that that's kind of like a long-term audience building move to make there.
Makes sense. And the parity on the price is pretty close too, by the way.
Yeah, GOFURS on PulseChain
now.
basically went back to the GOFURS on ETH price.
Mm-hmm.
And the ETH one didn't go as high, and it didn't dip as low. So
Yeah.
I think, and really what that means is just that most people that hear about this are people that are more into PulseChain than Ethereum, and that's probably where their money is to speculate with. So
pretty cool.
I think the biggest thing you said, which is the great idea of it, is the advertising thing, like launching on ETH, so people see that it's there, and then that it mainly lives on PulseChain. Because what they'll do is like they may see some of this GOFURS content on Twitter and stuff like that down the line, and then realize that like, why does it keep getting associated with PulseChain? Like, why am I seeing this on PulseChain constantly? And then they realize like, oh, okay, so this is where this guy really lives. Like, this is where he's from. The fees are way cheaper over there. I think it is a great way to bring people over. And regardless, I mean, some people may say like, well, what about like all the different tokens with utility and stuff like that? And this is just an NFT or gopher or whatever. That is what will catch eyeballs in a bull market, and it's going to lead into those other things too. And then can help lead into HEX, can help lead into understanding Pool Party and things like that. So
yeah, I agree. I mean, I've like the new people that have now kind of entered the fold after GOFURS. There's like hundreds and hundreds of people that many of these people didn't even know about HEX, and so I can tell in the people that I've started to engage more, and people that have kind of started participating in this stuff. And so it's kind of already I think and that's kind of the like it's like there's definitely room for the kind of more advanced like utility stuff, but there's also room for fun. And whenever fun has powerful speculative dynamics to it, I think that that's like the sauce there.
Yeah, I'm with you. That's great. Last question, and then Ewok, I'm going to go over to you, and we'll start doing more getting into Pool Party. Just where's your head at as far as like ERC-404s as a main crypto narrative getting into this bull cycle? Because even though NFTs, you could argue like, oh, this is a second cycle narrative. People have already kind of been at it with NFTs, and a lot of them don't have good memories because a lot of them just got completely slaughtered, and they don't want to come back. And I've heard kind of casual crypto people say that to me. They were interested in the last cycle. Do you think these ERC-404s could be? Ewok was mentioning AI earlier. There's different narratives that we're going to see kind of come in this cycle. But I mean, I'm going to guess that you think that this could be a pretty damn big thing since you've spearheaded one of the first major ones here. But yeah, what do you make as far as the future of it as a technology for this bull cycle? Price potential, all these different things, and how GOFURS can kind of, again, hopefully kind of spearhead it and be one of the first ones created.
Yeah, I mean, I think that like there's like that second cycle narrative that it's like on one hand it means like obviously in the first cycle when something goes from no one knowing about it to now everyone knows about it, it's like there's that massive gain, but there's also massive risk that goes along with that. And the way I see that, like the second cycle aspect of it is that there's like proven demand for digital collectibles on chain, and that it kind of tags onto that. But the major improvement with it is the liquidity aspect of it. Like with NFTs, it's like, you know, you could have one in a collection, and maybe like a good example called hash masks, which I was familiar with, where like they had, I think 8,888 of these things were minted, and like 8 of them had like, basically 8 of them went for like $1 million. 8,000 of them went for maybe $10,000. No, 80 went for $10,000, and 800 of them went for maybe $1,000, and 8,000 of them went for nothing. So like the liquidity in that is just not, most of the liquidity goes to a small handful, which is a good feature in its own right. Like kind of cutting right to the chase what your gains are for that whole thing. Like in Hex, here we are waiting 15 years to see what everyone's gains relative to each other are. But I think with NFTs, it's kind of good to just cut to the chase and like, okay, this person gets the gains from this thing, this person gets the losses. I think it actually kind of speeds things up a little bit. So I think there's definitely room for it. But I think that that's what the ERC-404 concept improves upon, is that liquidity aspect, because the token trading on a DEX, like that's something that I think is going to be timeless. Like that's probably, to me, the biggest innovation in crypto is the concept of trustless decentralized exchanges. And so kind of combining that digital collectibles thing, which there's clearly demand for, with the thing that is the most adopted feature in crypto really is the trading. I think that makes it where it's not just like rehashing the same old thing, trying to reach a new audience. It's like, you know, there something that is in the category that was already successful, and then make some improvement that boosts the financial aspect of it. And I think that that's why it can be successful.
Cool.
Awesome, man. Well said. Yeah, Dex is for the win for sure. Shout out PulseX. All right, Ewok, let's get some thoughts on Pool Party here. I'm really interested to hear about this, because the second thing in a string of exciting things coming here. So what do you got?
Yep. So you launched Pool Party, you said, on Sunday night. And the token itself was actually airdropped to the holders of, I'm pretty sure, GOFURS, Water, Team, and the pre-Pulse Maximus holders. Did I miss any there?
There were 5 there that each got 10% supply. It was so all Maximus holders as of the PulseChain fork block. So if you held basically anything that I had built prior to then, if you had held it on that day, you got the airdrop.
Okay.
And then the airdrop also included people that participated in just what I viewed as the highest risk products that I have built. So those are so I guess to put that in perspective, like things like the perpetual stake pool is like the token that's like backed by its underlying hex and redeemable. That is very low risk. Like that's a very low risk thing. But things like Team, for instance, which was included in that airdrop, that was a high risk thing. Water was even more high risk. You got literally nothing for a donation, so that was like high risk. And that was from 2022. So there was nothing that went on with that for a while. And then name claim was something where these name tag NFTs, people that wanted to organize pools, it basically let them buy these tokens at a flat rate. And then you could also deposit extra ETH and basically allocate part of the party supply. So those users were included in that. And then Team and GOFURS were added kind of at the end, because one, I mean, it's like we felt like, because GOFURS was really launched while we were waiting for the audit to get back. It was kind of like this, and just because of like how enthusiastic people were about it, and because it was like a very high risk thing,
right?
I thought it'd be fair to include them, and I thought it could engage that new audience. So that was kind of why, and we actually got rid of this whole phase and replaced it with a liquidity pool launch, kind of how GOFURS was. So that whole GOFURS experience actually, I think, improved the party product as a whole, because we actually got rid of this whole pretty complicated launch phase that was originally scheduled. So kind of learned a lot from that GOFURS launch. I think that the combination of making it where more people were involved in that airdrop, basically what it was that the launch phase for like people who were going to mint the coin by doing deposits and something called a liquidity fund. That was basically replaced with like expanding the amount of people in that airdrop, and then and then half the supply went into a liquidity pool. So that's basically the simple launch that I think made it a lot more successful. I looking back, and this was even like the third iteration, what party was going to be. If we had done the first launch concept, I don't think it would have been. It wouldn't have built a good foundation. I think it was because, I mean, pool party was first an idea in like 2022, right after the stake pools first launched, and so I think that the original launch thing, it was like 2022 thinking, but it's 2024 now and everything's different. So we just try to take what we learned from everything over the last couple of years and put that into a good launch process, which really the whole premise, like what my core focus in designing the launch of it was what will be both fair to everyone who had participated in these things, what rewards people for taking risk and being, like positive contributors to the ecosystem, and also what leaves meat on the bone for new buyers. Because if all the gains just go to the people that were already there, then it kind of sucks. So kind of that whole like, rewarding the long-term community members, which is like Water, the team people,
right?
Rewarding the new people, which was the GOFURS, and then leaving opportunity for people who are not here yet, and that's the kind of the liquidity pool structure for the.
Cool. So you can actually stake party. Can you explain the thought behind doing it for 100 years and why you went that high? Obviously, not many of us will see the end of that one. So what was your thought behind that?
Speak for yourself.
So the thing behind that one, I think mainly impact, like, because the way that the stake system is built, there really is no like technical limit. Like with hex staking, the way that like the T shares and the yield is delivered, that one actually has a limit of how long it could be. The original hex contract was supposed to be, I think,
30
years. But then in the audit report, it actually recommends lowering the max length stake to 10 years. That gas consideration that I was talking about earlier with the stake pools.
Right.
And then they decided to do 15 years. And so there really wasn't a limit, but it was more like being able to tell someone that you can fix your money with 100-year stake. I just kind of like that. So that was really all that went into the 100-year stake. And also, I think it's like, whether or not all of us here today will actually realize that. I think it's more of like a symbol and suggestion of long-term thinking around all this stuff. And so it's more maybe that 100-year stake is more symbolic than anything practical. But that's why it goes up.
Okay. Status symbol kind of thing. Gotcha. So so the party token itself, tell us about the use case for it and the auctions and how that whole system kind of works.
Yeah. So basically 3 things you can do with it. You can either just hold it, and if you hold it, you get a portion of all the yield, or all revenue that goes into the party contract from any source. It works with any token that is split up every week amongst party holders. So if you have 1% of the party that's liquid, not staked, because when you're staked, the coins are actually burnt, so they're not included in this snapshot that takes place every 2 weeks for the reward distribution. So you just hold it, and then you earn yield. So no staking, nothing required. You
don't have to do anything; just hold it in your wallet.
Yeah, you have to claim it after the fact, but you can let it just build up, and you have like basically like a year and a half before it kind of gets just flushed out of there, just leftover coins, which will mainly be liquidity pool, like, because liquidity pools may have a lot of supply, but those of course can't claim. So it kind of just prevents coins that are in contracts from going, the earnings in those from going to waste. So you can just hold it and then yield. The yield sources currently are Hex and Calm, the stake pools. There's a 0.5% fee that just goes into to party, and that is, and so it also gets the referral in COM. There's a referral aspect. The party contract is listed as the referrer for the COM token. So you get HEX at the start and then COM at the end of a stake. And so those are like the two known immutable, like guaranteed sources of yield. But there's also a contract that was built that actually hasn't been deployed yet. It's called the token dripper, and that is designed to drip liquidity pool tokens into the party contract, and then those get distributed. And so the way that the liquidity pool is starting is that it starts as a V3 pool, but over time it's going to be transitioned into V2 liquidity positions. And then those V2 liquidity positions, which will have an equal balance of, say, Pulse and Party, those tokens, so those PulseX tokens or those PHUX tokens, those will just be scheduled to be paid out back into party holders. And so just as like bonus yield. And so what's I think is pretty cool about that is that because those LP tokens are an equal balance of value of both Party and Pulse, if Party goes up massively, then those payouts that go into Party and the liquidity pool token are going to have a ton of Pulse. So this could actually be a pretty high Pulse yielding asset. And so the liquidity pool, it like those pool tokens are very slowly kind of transition. And that's because I think that there have been some problems with coins that just like have a locked liquidity pool forever, especially V2. And so it kind of gives some flexibility to where like you can give that like thick liquidity pool will exist for say 10 years. But then over new liquidity pools and new liquidity things may appear. And so you'd want to relieve some of that economic energy. And so just I think dripping it out to users and letting them make their decision on what to do with it, I think could be pretty high impact, and it boosts the yield. So various yield opportunities from just holding the coin liquid. And then you can stake it, and by staking it, you're earning more Party. So you're compounding your Party, but you're not earning the HEX, COM, and those liquidity pool tokens as reward while you're staked. So it's kind of designed again to be a very decision. Like you should
make a choice.
Choose.
Yeah.
And then you can, and so those are like that's kind of the crux of it, like kind of this income distribution and like dual yield model that's built into it. But then the other aspect of it are these NFT auctions for those name tags. And the name tags are used as a way to kind of make, it's almost like a verification stamp of the HEX of the stake pool. And because the deployer only allows the stake pools to be deployed if you basically burn the NFT of the name. You like permanently lock that name in with that pool contract. And that was more that's kind of for, you know, that's if you want to call that utility, that's like the utility of that NFT. But I think that it can actually be a pretty fun speculative thing with these NFTs that are minted in there. And the only way to mint them is through these auctions where the winning is burnt and the bids are made in Party. So if there's a lot of minting going on in these, or a lot of NFT auctions going on, that could be pretty deflationary on the Party supply. So if those NFTs become valuable and people are wanting to bid on them, and that can be, you know, pretty, you know, that could inflationary. So those are like kind of the three main pieces of the Party contract. And then there's the stake pools that they deploy, and those are like the normal HEX stake pools.
Like the normal, like the Lucky and the...
Yeah, exactly.
Okay. Deci and all those. Now, Maximus does not restake, right? That was the first one that was built. That's the only one that's not a recurring type thing?
Yeah, that's the only one.
Okay. So when you create a pool party token, and so how many of them are like created now? Do you know, like how many out there that haven't started yet that have gone through the naming process?
Let me see.
So like 10 or so right now?
So I think last I looked, there were about 13 pools that had been deployed. And they're actually a lot shorter than I thought they would be. A lot of really good stakes. And so, yeah, there have been, I think, about 13 of them deployed. And yeah, so these ones repeat. Maxi does not repeat, but these do.
These ones do.
And so you know, so now because here's I think that the big insight that kind of broke through with me is that originally my thinking was that like packing thousands of users into a single end stake. Like that's how you get people that have, and we're not in, like no one is really required to pay. So that's like how you get like 0% fee.
Right.
But then I was kind of thinking, and I think a lot of when the base stake ended, that 1 year perpetual stake pool, someone built a contract that ends hex stakes, where if they're a perpetual pool or an HI or a stake that's created through this thing, so basically publicly endable, it can consolidate those into a single block. And by consolidating them into a single block, it actually saves, I think, like 6% on the fee for everyone combined. And so it kind of had me thinking that, like, at first my thinking was around, maximizing the number of people that participate in each pool and maxing out the bigger pays better. But when you look at the bigger pays better, it's actually not that substantial, especially on long stakes.
Right.
And then also even if you save 80 on your gas fee, like say there's 5 people in the pool, even saving 80%, that's still a good deal. So it doesn't need to approach zero. And so that's why I think that, like, originally we were more focused on larger, less frequent pools, but now we've kind of decided to let the cat out of the bag here, and then kind of allow the proliferation of these stake pools, because they, even 80% savings is good.
Cool. So I think, honestly, I think the reason there's a lot of shorter ones than that you're seeing in the new ones are because the base and the trio and the lucky, it kind of covers, there's a lot of years that are covered there by one of those. And I had a feeling that we would see a lot more of the shorter ones, like the 30 days and 45 days. I think, my opinion anyway, that's why we're seeing some shorter ones. But so walk us through just step by step creating a pool party token, and that'll be all I've got for you.
Okay. Yeah. And I do have to go pretty soon, but yeah. So basically, the first thing you need to do when you have a token is or to launch a pool, you have to get the NFT of the name that you want, the name tag. So that's like step one. And then you just go on the dApp. There's a simple thing where you can upload the image, put a name and a description and a ticker. Well, the NFT. And then you choose just some of the parameters around the length of the stake and the length of the minting. And then you just click deploy, and then it approves the NFT to be transferred. And then so there's 2 transactions. You approve NFT to be transferred, and then it deploys the pool. And then that's really it. So it's very simple.
So at what part do the auctions come into play, though? So
that's before the pools are launched. So like so right now there are, oh my God, there's 1, 2, 3, 4, 5, 6 things up for auction right now.
Okay.
Hexanos, Heart's Law, Hex Party, and Continuum at 100,000 party bid. That's like $1,000. That's a lot.
Wow.
Wait, how much is that? It's more than that.
Nice.
Yeah, that's kind of how that whole thing works. Wow. But I do have to go. It was awesome talking to you guys. We'll have to do this again soon.
Yeah, we appreciate you coming, man. I know it was a crazy week for you. I hope you can get some sleep here in the next couple of days, at least. I know you said you were on a blockchain bender, and it's been a rough one.
Yeah. Well, thank you so much.
Get some Z's in. Yeah, we really appreciate it. Super hyped about Gophers and Pool Party, and we'll continue to follow the show. So thanks a lot, Tip Catcher. We'll catch you again soon, and keep checking in with you. So
thank you. Have fun, guys.
Take it easy, man.
So there you go, peeps. That was very interesting. Lots of awesome things going on just between those two things, Pool Party. And it's interesting too, Ewok, that it's like he was kind of saying, like almost two opposite ends of the spectrum. Like, I mean, on one end we have the NFTs, buying fractionalized NFTs with the ERC 404 with Gophers and everything. And then on the other hand, with Pool Party enhancing hex staking even more, like he has already done with the other perpetuals and stuff. So really exciting on both fronts. I did buy some Gophers the other day and looking to continue to add to that stack. So very excited. Any other thoughts from you on the interview tonight?
No, I enjoyed it. He's always, I always enjoy talking to the big brain guys, man. The way they can come up with that stuff, and they were waiting for an audit, and he comes up with another project. Just that whole thing in general. It just goes to show you, they're always thinking. He basically did that in a day or two, and he was obviously thinking of the idea before, but it just goes to show that how quickly he did it, launched it, and that's pretty special.
The GOFURS launched within like 8 hours of him kind of really finalizing the idea. Pretty insane.
I wanted to ask him like which AI he was using, but I don't want him to reveal his secrets, obviously. But
I don't want the GOFURS secret sauce out there. Necessarily yet.
Yeah, we would have some impersonators. That may not be a good thing too. So.
Yeah. It is awesome though, and moral of the story, just many reasons to feel really, really bullish right now. I mean, I know we've had a rough last couple of days, some of the candles and evidence by, like we said, just some of the reactions by people on Twitter, but I think we're going to be okay. It is still February. I know everybody likes to beat the drum about the Richard Hart comment before about 52 weeks to shake out the weak hands. PulseChain did launch on May the 12th of 2023. Cannot believe we're coming up on a year in a few months. Just seems unreal, really, how fast time goes. But let's take one more question here before we sign off for the night. So Liquidity Canada, I need someone to explain Gopher. I bought tokens, so how do I get the NFT? So, I mean, there's other things left out there that we would need to know. But essentially, if you have, like Dipcatcher was saying, you do have to have at least one full Gopher to actually get the NFT. And I believe that it just would appear in your wallet, and then you are able to then claim it on OpenSea. See, this is where I always get sketchy because
you don't have to claim it; it just appears. It would appear in your wallet. You would have to, register or not register, but put your address into one of the NFT viewers, and you should be able to see it. I think Internet Money had a NFT viewer. So if you were using Internet Money, you could view you just click NFT, and it would show you what you have holding in your wallet. Like you said, though, you have to have one full token. You can't have half of a Gopher won't get you anything. But once you get that full one, it does mint and you have it.
And a good way, excuse me, of looking at it that I think Dipcatcher says is like, think of it like that you have all six basically, leading up to whenever you actually receive one, because you're getting one. You just don't know which one it's going to be. So, but it makes them tradable too. Like you talked to him about like people kind of gaming it to see like, oh, I didn't get a rare enough one, I want to try again and stuff. So I think there's a lot of benefits to be able to trade fractionalized pieces of these guys. So, looking forward to see how this develops over the bull market. So shout out Axis Alive. With good stream. I think we've had a lot of good stuff tonight. I'm going to push a couple of topics to next week just because we've been going for a while, and I think they're still applicable next week as well. So
sure.
If you guys are still here, do us a favor. We do this every Tuesday night, usually start at 8 p.m. We did tonight at 7 to accommodate Dipcatcher. Smash the like. We appreciate all you guys being here. Support Real DeFi. Help support our channel. Support GOFURS. And we just really appreciate it. So shout out all you guys. Any final thoughts from you tonight, Ewok?
No, thanks to the chat. I see some new names in there. Crypto Stylist. I haven't seen her here, but we know who she is, and appreciate all the new viewers that are making an appearance. We appreciate it.
Yeah, very much. I did see a lot of new names tonight, so thank all of you guys. We will catch you right here next Tuesday night at 8 p.m. Eastern Standard Time. So for Crypto Ewok, this has been Boi Crypto on the Creed of Crypto podcast. Take it easy, guys.